Good morning, guys. Um, Probably might be running our live stream for about an hour and 30 minutes. This morning we have a high volatility market, so trade small, trade smart. As John from Topset was just saying, leverage down. Do not over leverage your account. Alright, so let's go through positions overnight. We bought some, lost some, made a lot of money on oil, picking some reasonable levels. You could see what I was looking at for overnights prior to and on price action. So we got in, got out, got in, got out. Using the bridging, more or less bridge. We were looking at this 50 level, was looking at this 50 level this morning early again. So the bounce, look for the return right on the open, got into the open and traded out. This level is sitting at the same 53.20 to 30 area we was talking about. I did not adjust it. Right, this is the 53.20 15 to 30 level we are looking at for major support. If found, you can see we break through, so what was assumed support becomes resistance. We look for a shorten opportunity right at 53.08 on return and got a pretty nice sell off 2 contracts on that. The small was last on the overnight side at London Open. So just prior to London Open we got in and got out. We still be trading our 4 contracts. I mean 2 contracts, sorry, per position, because our risk management allows that, and we balance it pretty much. But so again, same thing with the ES. Got a small trigger. On the oil, how we delineated everything, and you can see the big gap to the lower side. Been linear. We have length on the 250 on options. That is a 90-day option we running. So you can run 3 weeks options on these levels also, in our opinion. But options trading is very different. So you can see the big gap from overnight. The chat box is open, so if you're here and you have any questions about how we actually trade, or you're new to what I'm actually doing, this is a demo account. I'm not showing you my live account. It's for security reasons. Always require security reasons for that. This is the 55.20 that we have our GTC trades. All my trades are GTC because I'm on the open market, not on Top Step. Alright, so let's get into the ES. The ES we got crushed. We had levels at 60, which is so happens to be the point of control at the moment from overnights. So what I'm looking at here is the overnight. I'm looking at my RRs. So we tried to buy 59s and 60s last night. That failed. We got out with 1 out of the 3 contracts we traded. So you could have seen that on the position side. Those are large positions. I like to trade large positions in high volatility. I go counterintuitive. Do not follow that unless you're very experienced and you have very good and believe in your analysis. And believing in your analysis is very important. You can see we had a test of lows and we run back up on the CL. So let's get the ES. So what I'm looking for in the ES, this would be a 2 deviation move. This is implied deviation. You can see ID implied deviation. That is like average of a 65 point move to the downside, and we noted these 3 levels here. So let's put in those levels on our chart. So we got, you can see I have a 2 contract sitting there waiting for the open. Trade less if you're trading or trading small. So you're looking for 26 to 30 as the kill zone. 45 to 44s to 42s as a second kill zone. clean up this. You can see we testing low. This is could be a bloodbath, but the chances of deviation for 2 sigma implied is for closing is very low. So what you could do is look to get into an option, whether you're trading nadex or actual options. One day expiry does be difficult, so wouldn't advise you to go on single 1 day expiries. You can see what the delta is constantly negative delta. You can go to cumulative delta chart and look at it. May see some responsive buying to the 60s, so I may look to sell 60s and use my stops beyond 70 today. So looking for that 60 to 61 area, this lock node right here if you're looking for sells. So I have a sell sitting right here at 60. We're using the 42 as the midpoint. I'll use 71 for exit out. Value yellow as secondary. And use 8 points as my primary exit, and then roll stops. Always remember to roll your stops. Do not forget that. That is very important. I need to oopsie. I need to remove all that. Right, clean up the chart. Right, so we're looking at the 28 level for reaction buy. That's where we think, we are assuming that the market may go to. It could be a bloodbath, so make sure do not run into a wall. We're using 6.5 on the buy side and 11s to the upside for stops for reactive buying if it comes. Not too interested in this 35 level at all. So those are our levels. You can see the 77 may come into play today if there's a strong reaction to the buy side. So just you could use that as a stop to 78 as your permanent stop or an entry to the buy side. On oil, we want to lean on this 50 area, so we have this 52 here. I always bridge when I'm trading oil, so I have 2 more contracts buying right back here. You can see how the setup was. This is the original setup here. You risking 30 to get back in and out of the market. Is more or less a value trade we were looking for early this morning. Want to see if we could get another bite of the cherry on the market. Standard deviation, Alan, is implied I'm using, so I just go back to I using implied. I wouldn't show you how it's built, but I use a different calculation. I'll show you how to get standard deviations. Oops, okay, open here. That is a trade plan I have built out. So this is my deviation sheet. You can see it has some items missing there. One implied deviation for us is 32.7 today. You can see this is a sheet that I update every day. It's more or less we use it as a deviation level. So one negative deviation was the 61s we were talking about, and 2 is at 28. So that is implied deviation. For you to find standard deviation, it is not that difficult on here. So what standard deviation, my data is based on 3 years of data, backup data, so this data is a bit different. You could go to indicator, no, right, you go to volatility. On the indicators for standard deviation, you will see volatility standard deviation at the moment and where it stands. It'll check the last month, which is the period of 20 days. You could use show value, so you could actually get the number on the chart, save that, and you would see it here. Now for you to use the deviation, you need to go to a 1-day chart. Alright, and this is for ES. You need to employ that there. So you go to ES, volatility, standard deviation, save that, and right, you go to your 1-day chart. Why is not showing that? Settings, take out volatility. I want to show the number. So indicator is volatility, show the level, the number it is. So your standard deviation, you can see standard deviation moves a lot. So your standard deviation is at 35.7. So don't like to shut down a lot of people, but if you ever see a video with binary trade group, this is what he looks at the close. Those are the levels that everybody looks at. Dan, everybody. That is your sigma. That is Dan, FT. Everybody does look at this number. We built something in house for ourselves, really, to actually do it. So we again is responsive buying volume volatility. You can see the delta. This is why I use a delta histogram instead of the cumulative delta. You can add cumulative delta to a chart, but you have to know how to use it. The reason is you can see the break of the low. A lot of the long guys got taken out, so whatever he says, they become money close enough as John does actually refer to. So it'll be like that. No problems. This year I just do it for education purposes because I don't really need the cash. Just because a lot of new traders out here. And I don't charge for nothing, so it's just me commentating on what I'm doing for the day. I think I do have a lot of lines on my charts at some point. I need to take off the volatility. Where am I? I don't really like this platform that much. The reason is I'm more accustomed to my Ninja Trader, and you can see where we're looking for the value buy of the open and trading off of that area. So I can't read the tape. I tried a lot to read the tape, and it's about risk and risk management for us. So what I actually use the demo account to actually show you guys what it is. I have one guy with me here today who's trading in the office with me, so he actually on the listen also. He likes to crack up because he's heavily on oil, so we saw an oil opportunity last night and pulled the trigger. Got lucky on both sides. Lucky, luck and skill, a bit of both. On the ES, we got ripped apart. You can see it from positions, but we made back all our money. Is weighing first is weighing portfolio. Make sure we have proper weighting on the portfolio. So you can see we targeted. This is the logical test of the low, move to the high, test of the low, value area. Now one thing differently I use on my value areas is this. You would see a lot of guys use right, a lot of guys use 70%. I use 68.2, which is the inverse of, it doesn't make that much of a difference, but it's giving a little more clean data. So you can see the clean data was showing at 51s and 52s overnight when you pull back. So taking overnight open into account at the situation we were in. We were looking at this volume area here, and where we were looking to actually get in into the market and the value. So how we did that was go to the 1 minute chart, look for the reaction on the open. So we took into account these things, knew where exactly where we were looking for, what we were looking at the value area low, and popped the trigger multiple times right here. 1 2 3, got in, got out, and we know our exits were our exits were, and we know from looking at when we extended the high to low sequence. So what you do is extend your high to low. I use oil in a different manner. So you can see, you look your last high low sequence where you want to get in into the market after you on the open, got 2 bites of the cherry, ripped and ripped open. But trading oil is very volatile and you could get knocked out. Do not trade with small stops. I advise that a lot lower your number of contracts and trade with bigger stops. I mean, it's just our idea of trading. We got pretty nice options trade off the high from Friday if you follow. Close up one option overnight at the 40 level. We don't trade naked options, we trade spreads, so got a reasonable profit on our spreads. Bang bang bang. Alright, now let's look at volume, which is very important. Go to your quote board, we're at 800. You can see we have a reasonable volume build this morning. I just need to take 5 minutes for myself and get some coffee. Forgot to pick up the coffee. So we're looking at this area here for the continuation trade, value up, value down. How you can do this trade is how we actually have it set up. How we have our trade set up is like this. For initial balance, for short-term balance, we looking at 58 entry for one. Alright, so this is the actual setup we have. So this is what we call high volatility and bridging. And notice where we actually are placing our stops. So that has been 9 points stop for that initial one, and then we go to the 61. And you know, because this would be a failure point right here, node. If it does reach back up to the top side, this is the bridge we're looking at, bridging the trade on the sell side, and we'll manage through there. First in is always first out, and leave the secondaries for runners. So we're using a 9.1 to 1 TP, so that will put us right back at, we use 2/3 of our trade, so we're looking at 6 points on TP1 and let the secondaries run. So it is, you can see where the delta is, where the delta was sitting there. Yeah, negative delta. The move was not moving down, but timing would have been very important. This is your opening candle here. So expect a lot of price discovery this morning because of the high volatility. This is your volume profile from overnight to now, your live volume profile. You can see your volume at your lower end, you're having a D-shaped profile forming. So you want to see this fill up because you want to see a little more price action in this area with more volume in the market. So that is the expectation as of now, because this could have become a bloodbath. That is why you wouldn't see me trading here at all. Nice, Alan. Ninja provides me have a lot more confidence in Ninja and how it's set up and what I could do on the platform. Trading on the open market. I trade on the open market through a CGQ broker, so it's like to make sure data supply and stuff. I was actually testing if I could get my to get a limit call on Friday. So we know what the margin as a day trader. I should know exactly what is the day trading margin and what's your risk portfolio. Always build a portfolio in trading. So the intention is probably the middle of next month if available, because I might need to go. I retired. I retired at the age of 33 or 32 actually. I retired from being if you know, if you work on industrial plants, I used to be an instrumentation engineer. It's more like the safety systems. I used to do that. Uh, Traveled a lot for work and stuff. Lived most of my life out of my country or away from home. So couldn't take the stress too longer, so more or less wrapped up, and I was trading part time, forex mostly, long to well, middle term as a swing trader, and start traded on the side. We have a small group of guys here. We're trying to build out the office. Have a lot of trouble building out the office. Had some malware issues, so I'm using my actual gaming computer. One of the gaming computers to trade, and my buddy have my new trading computer trading this morning. He's trading oil. He's an active oil trader. He loves it. I don't love oil that much. I'm a S&P guy, fully S&P. Do take a dab on that. Looking, the only public stocks that are holding is Tesla. My average in as of the moment. Made a lot of money, not some money. Made a lot of money on Tesla. Got in at some at 200 and stuff. Looking for a reasonable buyback on it, because I like the out of 10 of my 60 that I'm hold. Well, I have 50 now. Looking for a reasonable pullback. Probably might go through that over today. Let's look at the calendar. Always have your ears to the ground. What do we have this morning? Core durable goods. Why is not my core durable goods not showing up here now? Oh, that's for Tuesday. Oh, we don't have anything this morning. In Germany, the Euro looks weak. That's not good for the Europeans. Tomorrow we have stuff going on. So have that. Use that. Oopsie. That's problems. The coronavirus is actually Wanda do something very interesting here. If you know who Wanda is, they more or less forex introduce some broker stuff. Doom to doom to doom. You can see what we are gonna be leaning on actually here is value area high. Our deviation level for that short-term opportunity, looking for the short-term opportunity to the downside, have stops set in a particular place, which will be our failure point. You can see the building here. This was the expectation, but we didn't want to take the chance here because it was the open. We didn't get a chance to get into the market at all, because we would have been looking for that 42 area. It was a bit too quick. I don't like to be in the market before now, which is 9:45 a.m. Eastern time. I'm an hour ahead of you guys on my time, so if you see any differences, it's cool. So I'm on like this morning, this time I'm looking for a timed entry is like EV 10 o'clock, 10 a.m. Eastern, or on London close is for a timed entry. And assuming the risk like this morning, we are assuming a bigger amount of risk in the market because of the volatility. Oil might be pumping. Look for the breakout on oil if you're looking for. It's either you get breakout. Remember, this is the identified area we were looking at the 53.25 level, which we found from way back when. Last week was way back when. And John and myself was talking about that. If you're looking for an opportunity there, 25 might provide you with a little bit too much of risk for you guys. We already in that trade at 20. On the short side, just looking to scalp some points of it. We're looking at 20 point stop loss up, putting our stops where we have active in the market. He just now implemented that. So he implemented sell at 20s and looking for that 80 return. So you're looking for sell off right here, because I can show you what he's actually doing. We just call him the lucky guy sometimes. So he sold 20s looking for that 80 trade. On the technical level, he's only taken 20 points of risk on the identified area. If it does break, we know where the failure point is. That is more or less a value area high point. If there are enough bears in the market, we made some money last night, so he is able to take that risk. So once you're within the kill zone, just monitor it. Look for a 10 a.m. entry if you're looking for it on it, because he leverages in a certain way. Because what you could get here is this. Dum, 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 dum. So we know that is the major inflection point. Come here, go to WTI crude. Go to my technical chart. He's actually implemented most of the live stuff this morning. Thanks for having him this morning, because he's the best. It'll be very hard to more or less stream. Why is my chart not coming up? Come on, don't be a fool. Technology hates me sometimes. So, reading the situation. Why the wrong one? So you can see we have options by, this is our options level. And we've got a sweet sell on our option at 58.50, a weekly kickoff level, everything tied in this for equal measured move to the downside. That's at 51.50 to 60 area. So we identify this node right off. This was the 25 level. I need to lock this. Sorry, I got to lock it. That's why. Lock that level. We have that level as more or less a kickoff implication point for the market. So that is on the days, right? So you're looking for the shorts to start to come into the market. If it does succeed, we know where our stops are. So we don't overtrade or over leverage into the trade. We know we could get broken out, read the situation and the analysis. That is how we just trade that. because most likely you might get gap fill here. If you do get gap fill, look for the mid of the gap fill, which is the 54 outside if you're bullish, but we not too bullish on the market today. So if you guys get stuck out there, make sure monetize, make sure look the time you trade, figure a better opportunity where you don't see the reaction in the market. You get the equal measured move, which is 43 to 20, that is 60, 80 and 60 is 40, that is the top level there. You might get stopped out. So he doesn't trade, you trade less contracts on that than he would normally trade there. I wouldn't put it on this because I read the situation a lot more. And this is where value and pointer control and analyzing which part value and pointer control is important. You can see the pointer control is shifted to the upside. Yeah, you just got stopped. Marsh secondary filled on my buy side. Hedging is not allowed in some accounts, so be careful. In most accounts, you're not allowed to hedge. Just wait for the market to come into the area. So if you're looking at the equal measured move is from forgot to show the what I am looking for my short-term opportunity on that, because that was single contract traded. Is the logical move. Go to 5-minute chart. Alright. You see the opening price. Logical move is this. This is the opening push to fill the orders that were left behind overnight. I have one right at 50 here. And see if we do get the flush. So this is our sell point we're looking at in the range. Actually, how we supposed to check this is you could use 2 to build a bridge. 1, so you know exactly where your stops are, and 2, the opening range push. Oh, this is day trading, pure day trading. Kill zone. I have our order sitting out at 53.50 on my live. So you're looking for this level here. Down. Forget, I don't have my analysis sheet on this particular website, so this is where you look for a move. This is the decision point. We know where that is a decision point in the market is. You look for time. So you want to make sure you're after 10 a.m. Huh? Why? Let's see. Oh, that's because I don't have a proper analysis sheet on me. That's not to save it. So I'm not putting that one time. You know, there's the implied inflection. So I'm using 80 as my stop, 50 as primary entry. What you can do with that is bridge it also. So this is the actual live trade that I working on as we got on here. It stops behind the open in case of the open and push. We identify the area 50 to 60. What you can do is bridge single, single, one at 50, one at 60 if you have enough leverage in the market for the push. Now implementation of your strategy is very important. Very, very important. Like the kill zone I'm looking at here, looking at the bridge stop. You got the kickoff of the overnight value point, value low, value high, close out the trade, didn't get anything on that. I had secondaries running overnight, so we closed up most of our secondaries on the overnight side. What is the ES doing? Sitting on his hands, like normal. That might be a morning V if you're so interested and you want to take a pop at it. You might be able to do that, but you might also might get crushed also. You can see a delta finally reacting. You can see cells in the market was moving up, delta is finally reacting, and guess it will die. But I'm not interested in that 50 level. Oh, I need to take my coffee break, so I just mute.
Order filled. Order filled. Order filled.
Okay guys, so let's go through some stuff. Well, our active positions are we loaded on one and we short on one. So we short on oil and we long on the ES at singles at the moment. So I don't want to have to do this, but just for clarity's sake for you guys. Just miss all of that crap. Alright, so I filled on the 45, 42 sorry, so far. I'm looking at 49s as the exit. And if we do get filled on the secondary, we know we have enough leverage to work out that. So just taking small jabs at the market really, which is that money. If you're trading multiples here with the single entry, make sure if you TP1, your exit, and then roll your stop to the up. So I might need to do this. So be able we can monitor both at the same time. See what's up with what's up. So you can see we have convergent stuff going on here. Market is moving up, market is moving up, market is moving up, market is moving up. Correlation. Usually this correlation does not occur that often, so it's kind of weird. Make sure to bring volume value. And you can see a point of control shifted up. You can see a point of control here, shift up to the upside. Point of control has not shifted from the overnight shares yet. So be careful. You can see complete Gaussian has formed in our opinion here. Take a look at your value and becoming more Gaussian, which is bringing the market into a balanced state. And where did my CL go? Oh. And the inflection is acting. We have the active inflection point here. So break against here, don't really have issues with retesting. We may get a chance to reload for might short or might look to see where volume value is. So how you deal with this situation is as follows. Bingo. Overnight POC and open market POC is the same. And you can see where actual values are on open market right now. So I can move back this to here, right? So we took our pinch, you know, we can get a little bit up of it. Can leave that running, and we want to get this single close early. And
Order filled.
Bingo. I will trade the multiple contracts. Your secondary should be up here at the 52 area. So having a plan is always a good thing. Trading the plan is even a better thing. Now for our secondary entries, we want to make sure push that up. Yeah, if we do get filled later on in the day, and look for the median entry and the exit on the trade. So pretty nice trade. And if we had gotten to, because we didn't want to bridge because we got suckered in twice last night, sorry. Don't ask me how I exactly built this. I just know it works more often than not. 42.6 was the calculation for that, and our open market low was 42. Now looking at the numbers here, you want to have your conservative on first. See where it stops at. You want to see the push up into the air and then enter the secondary live. If you do get a breakout up here, if you had secondaries, you should be out of your secondary. Don't try to take too much out of the market unless you have your runner on running and looking for that long. Might get stopped out on oil, though I have no issues with that. If it does fulfill, trade the plan the trade the plan. Would make our small money. We know we guaranteed small money, we just want more. I had a pretty good morning, couple of very good winners on the trade. So this is what we're looking for secondaries. Secondaries are built from this 39.40 area here. We want to be below here, so we're only taking 4 points to 5 points at risk. We know we could enter alive in the market here, or alive in the market here. We know where our bridging is, where we want to be in the market. Don't know balance of it. Good trading this morning, reasonable trading. Execution was pretty good. Check what the 60.8, that'll be 60.75 is the after entry he has on. That would bring you right back to this nodal value here. So I do like to see where the market be in the market when it's struggling. Now I want to actually enter a trade where I see the market struggling, or exit a trade where these values are important. May see an opportunity to re-enter the market here. Just waiting for London to close and take a short trade, meaning stops very close, well, from what we usually do. Move this one. Right, in full value from overnight open. You can see why we get entangled. Either is support or implied resistance. So that's why we holding on this secondary. If we do see point of control shift, we know exactly. We move our TPs to the POC. So remember, this is active point of control. So we know we have options for live. So we have a single sell at 60.75 and active buy, active booking order buy at 39 to 40s. 40 is where we have average location in the market. We're not looking at the 53 so much. 53s is a level that I pointed out last night. We may be inflective, so not too interested in that at the moment. Reason is SNR and you got an entry. No issues with that. Just not my risk on my risk profile right now. So we did look at small jumps in the market. Small little ones. The little ones. Survivability is important in trading. So you can see I don't have anything on the 42.5 at the moment. We already took our money off at that level with monetized. So you're looking at 39 to 41s as an entry. Just wait for it. If you do get it, you get it. If you don't, you don't. Sitting on your hands most of the day is a position. PN flat is a position. Market may die by London. Close there. You might see some stuff acting up on London close. Oh, I needed to check this. Probably might need to make a call to see if I do have. So my last buy on Tesla was at 98. And it was simple identification. Probably might have 10 seconds. What was my range? 39s. Not bad. Who's that opening? What do you want? Oh, that dance. My last buy was at 498. Got a sweet push off of that. I wanted boom, boom, boom. Do the 15-minute chart. See where the opening was. Yep, be a gap. So this was my entry at 98 here. That's simple. Simple. We opened, push up, wait for return, and then buy. We have some to give back because the market a little bit long on the tooth. Last push up. We got some really neat buys off of that. My average entry is at my average entry at now 288. Back at the 40. Probably might have to get in some on a secondary push. 17,000. Took out 5,000. I mean, almost 6,000 I got back. And closed off at 583. That was my 7 to make up that. Close off 10. Yeah. Got that. Took that out. So have a lot less now in the market. Back at 50 with an average price of 283. My next buy is at 33s. I think I call in 33s and 33s and 30s, 33 and 35. It stops beyond 70s. So I just wait for the pullback. It's simple strategy. Don't do too much things with this because my hope is in the next 5 years the price would be in the range of $1,700 to $2,000 per share. Just making sure I load up maximum. Probably my load is average price would be $600 for my average entries. So far from that with 100 stocks being invested. So been streaming for a while now, so about an hour. We had a pretty good morning, so I probably might be locking off here. Trade small, trade smart, guys. trade what you see. So we had a long position here. We're looking to get back in a long position between 39 and 40s, shorting out 60s to 58s. Make sure you're looking at stops here beyond 35s and stops here beyond 67s. So trade small, trade smart on that. Oil is being a pest. Not too much issues. We know here would be tangle point. We know we got out that one. We got in one, got out that one contract, rolled our stops. Don't like to place my oil stops on break even. It'd be a little counterintuitive to me, but trade what you see. This could always change if you have your system loaded up and you see your point of control switch. Make sure these are VPOC. Always remember this is VPOC. Make sure that you remember how to act and react to the market. Gonna play games. Boy, gonna be managing stuff there. So have a good one, guys. Bye bye.